For many investors for the ASB fund, this year marks one of the lowest points of ASB giving their dividends. As we can see from this particular chart, the dividends for this year is as much as 4.2%, but ASB is also giving 0.75 cents for the first 30,000 units. So when reading the Twitter space, some was annoyed and others wanted to liquidate their ASB investments so as to invest in other asset classes. So the whole intent of this particular episode is to look at how good ASB is as an asset class. And the next question is, should you continue to be invested in the ASB asset class? So overall, when looking at the ASB track record, we could see between the year 2000 to 2020, ASB has been giving really good dividends of between 11% and it hovered around the 8 to 9%. And lately, it has been continuing to drop. And in 2020, as I mentioned to you, this is the dividends given by ASB. So over here, let us do a quick analysis as to how good PNB is as a fund manager. If we were to use the KLCI as a benchmark, between the year 2000 till 2020, the KLCI performed as much as 68%. And if we were to just do a quick and rough calculation, and if we were to take 68% and if we were to divide it by the past 20 years, the returns per annum for KLCI is about 3%. So if one of the main asset classes for ASB are the stocks listed within the Kuala Lumpur Stock Exchange, we can see that despite the KLCI giving returns of about 3% on a per annum basis for the past 20 years, the ASB fund has been giving really good returns and really good dividends to its investors. So the quick point which I want to make over here is that I know there has been a lot of finance books which popularize this theory whereby investing in ETFs or investing in passive funds actually gives you better return. If we were to invest in the KLCI ETF, assuming if there was a KLCI ETF, the returns would be only 3% on a per annum basis. But right now, if we were to invest in ASB, and since it's an actively managed fund, we could see that the returns is so much better than the underlying asset. But having said that, in the year 2020, I'm going to show this particular slide again. We could see that the dividends is about 4.2 and there is also a bonus. And what this means, especially for those that holds at least 100,000 units, is that our effective returns on investment is about 4.475. Now, let us compare this dividends against the KLCI. And let's look how the fund manager managed to outperform the KLCI during this year. We can see that the overall performance for the KLCI during this year is about 1%. But of course, during the pandemic, what happened was there was a dip of 25%, while after the dip, then the market recovered and the recovery is about 34%. Right over here, I want to say that I do apologize if the math is a bit fuzzy, but I'm just doing a rough calculation just to show an illustration or just to show a point. So the main point this particular chart shows that despite KLCI giving returns of about 1%, the ASB fund managed to give us returns of between 4 to 5%. That's point number one. Point number two is that the ASB fund protected us against the market volatility. Over here, should we have been investors of stocks, we would see our portfolio drop significantly by 25% during the first announcement of a lockdown. And if that is our retirement fund, that can be relatively unnerving for some investors. So anyway, let us just focus at this particular point where ASB started to give about 7% and let us compare it against the KLCI. Okay, so over here is a little chart of the KLCI. I do apologize if the time frame does not start from the 1st of January 2015. Again, I'm working with very limited resources. But the point which I want to make over here is that the KLCI has been relatively flat during this past couple of years. and for ASB to continue giving us dividends of about 7% during this particular time period, I think in a nutshell is amazing. So right now, let us conclude with what we have seen from this particular episode. Number one, we can see that ASB would be a wonderful asset to protect us against market volatility. Assuming if I was a retiree and if there is some market volatility which saw my portfolio drop by 25%, yeah, I won't be the happiest person in the world. That's number one. ASB protects us against market volatility. Number two, I want to say that when compared to the underlying asset, if the KLCI is the major asset class used by PNB to gain returns or to garner returns for the ASB, we can see time and time again that ASB managed to outperform the KLCI. That's point number two. Point number three, which I want to say, is that always remember the stock market will always go up and go down. So what goes down must go up, and what goes up must go down. Okay guys, so with that, if you found this particular episode helpful, useful, give me a bunch of thumbs up, and if you're not subscribed, do consider to subscribe. And with that guys, I hope to see you in the next episode.